My name's Matt. I'm a solo developer and I've made an app called Cryptological. What it does is analyzes Bitcoin financial information, uh, stocks, macro stuff, economic stuff, and mainly Bitcoin and crypto. And just creates a bunch of useful indicators and charts to try and help us understand the market. Today we're going to be looking at the running ROI risk, and specifically the diminishing returns that we've been seeing over market cycles. This chart is very clear. It shows you diminishing returns very clearly in the running return on investment. The ROI is return on investment of Bitcoin. So how much money you would have made after a given time period. This is set to 1 year. So you can literally see the ROI has gone from 90x down to 24x the next cycle. And then in 2021, it was down to about 11x. And the previous cycle was very different because there wasn't a parabolic blow off top. And we ended up topping only out at about 3x. The apathetic end to the last cycle has kind of broken a lot of indicators. If we look at the standard Bitcoin risk indicator, you can see that we haven't gone up to these high levels above 0.8 or 9 during the last peak of the cycle. We just cleared 0.7. And if you look at the price, when the risk was at 0.7, that was only about the top of the previous cycle. So that wouldn't have been a good time to start getting rid of all your Bitcoin at that point. So it's really got a lot harder over time because of diminishing returns, I think, to try and predict cycle tops. But conversely, if we look at the other end of the market, how has the bottom end of the indicators, the ones that show you good times to buy rather than good times to sell, are they holding up so well? Well, it looks like it. On the Bitcoin risk chart, they still look like we're going back down to these really low levels every cycle so far. And we haven't got there yet. We're at 0.18 now. We've gone right down to the 0.03, 0.01, 0.06 in every cycle that we've seen so far in Bitcoin's history. So if it's harder to predict the tops going forward, especially if we're going to not have these parabolic blow-off tops, which are going to be harder to have as the market cap of Bitcoin goes up because you need exponentially more money going into the market to move it higher as the market cap increases. But there are ways that we can still use these metrics to identify useful information. This is the recent component that I've added to Cryptological. It's the running ROI risk chart. And if I actually just switch back to the normal ROI chart, and we can just add the buy zones. If we have a buy signal down here where the ROI gets down to about 0.3, and I just highlight these buy zones, every time the ROI gets down there, it's been near enough the market bottom. I mean, the 2015 one still had a little ways to go. Like, what was it? It went down from $227 down to about 220. Yeah, basically that was the bottom. And it just hung around there for longer before it started climbing. And then in 2019, it's telling you to buy at around 3,000. And then basically it was just up from there. And then in 2023, it also called the bottom beautifully, like 15 grand. And then it was basically just up from there. It was the bottom of the market. Now we haven't gone back down there yet. But if you look at the timing of all these, that was sort of October, November time, the last cycle. Back here was December, November. And then back to 2015, it was around the turn of the year, around sort of December, January time. So if we carry on that price action, that prediction over the cycles, or just follow the patterns, then that puts the cycle bottom historically predicted to be around the end of the year. And if we do get another slight drop in the price of Bitcoin, that's going to coincide with 1 year previous on the ROI chart would be around October, November time when we had the top of the market. And so we don't need to drop that much in price to increase the ratio of difference between the return, if you see what I mean. I'm not explaining this very well. But since the price 1 year ago was higher, if we drop a little bit, then the ROI will drop a lot more. So that can see us get back down to these 0.3 levels if we have another slight drop below our current levels. So I don't think we need to have another massive drawdown in Bitcoin price from here in order to get down to these, what would make another highlighted blue level. And another way of looking at this is click on the risk tab, and it just sort of normalizes the data between 0 and 1. And it really highlights the difference between these parabolic tops we've had in previous cycles and this last cycle, where we really just hung around up here for a lot longer because we never exceeded massively the previous return on investment. So the tops are harder to call, but the bottoms are still looking pretty clear. So there still can be use in these indicators. Now there's also a sell zone highlighted on here, which is obviously you can see the peaks clearly. Apart from on this one, I mean, if you started selling when the sell zones were telling you to, you would have been selling at 72 grand and then around 94 grand, which I mean wouldn't have been the worst idea, to be honest, because a lot of people got caught out expecting a parabolic top that never came and then just never got around to actually selling any. And then you get to a point where you're like, oh, I'll just hold on to the next cycle. But you forget how painful that is when you're at maximum drawdown point and you just want to capitulate. So it wouldn't be such a bad idea. But you can also adjust the risk sell level, either lower or higher. But the cycle, these indicators didn't peak at the cycle peak. So it would have been difficult having sold a lot of your Bitcoin, then seeing the price go higher. A lot of people get trapped and then want to buy back in, which is generally not a great move. One indicator that is on Cryptological that does help you identify market tops, and you can see this because it identified the market top of the second market top of 2021, because we peaked early in March and then we had a second peak in November, and that's this TX tension component that I made, that it basically plots the relationship between transaction activity on the Bitcoin network and the MVRV, the market value to realized value of Bitcoin. And it plots that into a nice way of visualizing basically how much stuff's happening on the network compared to what the price is. So if the price is low, but there's loads of activity on the network, I mean, that's suggesting oversold territory because there's a lot of stuff going on, but the price isn't reflecting it. And then conversely for the overbought side of things. But we can visualize this if we just highlight these areas again. If we look at overbought, you can see it did. The early data is maybe not quite as useful because of the lack of users, the lack of transaction activity, which is it's tried to be normalized for, but it's difficult to get a perfect ratio. But it still fires after sort of parabolic moves, at least at lower levels. But the real use seems to have come in recent cycles, where we can see it flashed with the early peak. It was flashing from 56k up to 57k, and we did go a little bit higher up to 63. But if you started scaling out around those levels, taking profits, you'd have been pretty happy. And then again, when the price was at 64k for the second peak, it was flashing again saying top signal. And I don't think many other indicators I've seen online have done that. And then on the way up, it also flashed at these sort of intra-cycle highs, where you can see the network activity, I guess, was quite low, but the price had been going up anyway. And then it flashed here at 30k. The price did drop down to 25k. And then again, we went up to this parabolic sort of move over a month or so, February to March 2024. And then it flashed again at 70k. And then we kind of bimbled around, trending downwards a little bit. We got down in the end to about 54k. So from over 70k to 54k, it said it picked the 70k top. And then it flashed again around the 96 to 100k level, and we dropped back down to 78, high 70s afterwards. So this has been a pretty useful indicator. It didn't get the very top of the last sort of lurch higher that Bitcoin had before it just fell off. But it was flashing again. So if you were taking profits here, you'd have been one of the few people that actually sold near the top because an indicator told you to of the last cycle. So that's pretty useful. We've also got oversold sections on here. And these all change depending on the smoothing, the moving average that you can select on there. They can change, but these ones generally are found to be the most useful. And so it's the buy signal here. It's a monotonically increasing trend line at the bottom that just coincides with the troughs, the bottoms of this indicator. And so here you can see it flashing right at the bottom of 2019. And then again, not quite right at the bottom, but near enough that it would make no difference a year later if you bought there, of the 2022 bottom. And then again, this intra-cycle bottom, it caught the intra-cycle bottom too. So if you're not heavily invested as much as you want to be during a cycle where we're trending up or trending down, this indicator looks like it's quite useful in providing that information you can need to help you decide when to do it. So it looks pretty useful to me anyway. The one annoying thing is I created this about a year ago and I wasn't sure how useful it was or if I could rely on it, but all of the data that's happened since has just qualified it as a decent indicator in my mind. So I don't actually use it to make any investment decisions, which I'm really regretting now. So I should trust my own work a bit more. Maybe I'm not such a retard after all. Maybe I'm not such an idiot after all. So yeah, the intra-cycle lows. And then here as well, it's saying maybe the price is going to be going higher because the network activity is really high and the price isn't reflecting it. And then lo and behold, you get a little spike up again. And recently it's been flashing some buy signals. And I think it's probably not going to turn out to be the worst time you could ever just start scaling back into the market. I do expect there to be one more drop as we were looking at on the ROI running risk chart. I think we'll drop back down to the 0.3 level, probably, but no one knows. Generally, the bottom indicators have still been useful and relatively accurate, where the top ones have been struggling to kind of keep up, apart from that TX tension one that I made. That's exclusively available on cryptological.app, so come and check it out if you want to see it. But yeah, that's all I wanted to talk about today, so thanks for listening. I'll catch up next time. Take care, bye-bye.